our big discussion and debate right here on the India Development Debate this evening. And I'm being joined by a very, very special guest, Minister of State for Civil Aviation, and somebody who understands Indian finance and Indian economy. Jayant Sinha joins us live right here on the show tonight. Thanks very much, Mr. Sinha, for being with us. 6.3% GDP growth, 6.1% GVA, of course looking a lot better than 5.7 where we fared in the first quarter. Is the government convinced that this is a reversal, slowing growth after 15 quarters? Or do you believe we can declare a reversal only after we see growth over the next few quarters, 3 to 4 quarters, and then call it victory?
So Priya, what is very clear from the data is that the economy is shifting gears. All along I have been maintaining, and of course my colleagues in government have also been saying, that we are going through a very fundamental structural shift in the economy. And when we do that, when we go from, let's say, third gear to fourth gear, we are going to have a period of adjustment, and then the economy is going to really take off when we go into fourth gear. And I think the data is beginning to show that. We've introduced major structural reforms as far as our economy is concerned. Obviously, demonetization and the formalization of the economy, GST, the bankruptcy code, the recapitalization of the banks, new monetary policy, all of these, as far as the economy is concerned, are very fundamental structural reforms. And the economy has to absorb all of that, the economy has to deal with all of that, and then move to a new growth trajectory. And I think what we've just seen is the inflection point as the economy moves into this new growth trajectory.
Mr. Sinha, despite the strong rebound, most people in the market believe that the best case scenario for this financial year is a growth of about 6.5%, which will be lower than what was projected in the FY18 budget. Would you agree that 6.5% is about as much as we can grow this fiscal?
Well, that is simply going to be a function of what growth we saw in the first and the second quarter, and then the acceleration that we see in the third and the fourth quarter. So somewhere, between 6.5–7% or so is what we should realistically expect in terms of the acceleration that we're going to see overall in terms of GDP growth rate for the year. I think Q3 and Q4 is where we are going to see the real acceleration kicking in, and we should be well north of the 7% in my view for both Q3 and for Q4. Please remember, of course, that the global economy also is really showing very strong signs of growth as well. And with the global economy and those tailwinds also propelling us, we should see significant acceleration as well. Demonetization, of course, is largely behind us. The economy has been remonetized. Digital transactions are growing very quickly, and largely the first adjustment, the most major adjustment associated with GST is also over. So under those circumstances, we really should see a strong acceleration. And in any case, Q3 and Q4 seasonally for us also is when momentum picks up. And so I'm sure see an acceleration as Q3 and Q4 emerge. But for us, of course, 6.5–7% this year is absolutely not satisfactory. We, I think, have been able to position the economy so that it can grow in a robust way over 8% for a long period of time. So unless we cross 8% growth and are able to sustain it over multiple years, I don't think we'll be satisfied, because that's really what it takes to put India on the path to sustainable prosperity.
I'm glad at least somebody in the government is saying that 6.3% is not what we are willing to uncork the bubbly on. But Mr. Sinha, given the fact that the government has front-loaded expenditure and fiscal deficit is 96.1% for up until October, going forward, the private sector, do you believe, will be able to carry from here on? There is a limit to how much the government can spend. It's foolhardy to imagine that the government engine of investment can keep revving up.
No, that's exactly right. And I think what we are going to see increasingly is now that GST is being settled in terms of business practices, in terms of the way businesses are absorbing how this is going to rework their supply chains and so on. I think we'll now see the private sector increasingly picking up the growth burden. And so we'll see that government will have somewhat less of a role to play, and the private sector will play increasingly a more important role. So we certainly expect that as well. But I would caution in terms of the numbers for this year to compare them to last year, because we are obviously completely overhauling the indirect tax structure. And so comparables to previous years are going to be difficult to do because the revenue collection this year is going to proceed on a completely different basis with an entirely new indirect tax structure. So let's wait for another month or two to see what happens on the revenue side before we come to any conclusions as far as where we are headed in terms of the fiscal situation. I certainly think that revenue collections are going to pick up as GST stabilizes even more, and then I think the whole fiscal situation will be viewed in a very different light.
How are you reading the data on gross fixed capital formation? The finance minister spoke about it and indicated that's a positive sign. Now, while it's grown at 4.7%, which is obviously good, but seen as a percentage of GDP, it's actually declined. And that's a worrying signal, isn't it? Because that's an important metric of investment. How worried are you on that account?
I'm not worried, Sandeep, because I think that sometimes the data tend to not provide a full picture of the economy. And I often give the example when we talk about gross capital formation about what's happening in the aviation sector. You know that we have 500 planes in the sky right now, but we have firm orders that have been placed for another 850 planes. The vast majority of these 850 planes, and even the planes that we've ordered in the last few years, have come in as leased equipment, not as equipment that has been purchased. So when equipment is leased, that doesn't show up in gross capital formation, particularly because these planes are being leased from Ireland in most cases. So it really is not showing up as gross capital formation for our economy. But of course, that's not showing the true picture as to what's happening in terms of growth in the economy or even investment in the economy. So we have to be very careful about how we pass these numbers, how we interpret these numbers. We really have to go to the underlying drivers in the economy to understand what's really driving the economy right now, what are the new and innovative ways of financing that are happening, and then we can really get a correct and true picture of what is happening in the economy. But really, growth is being led by different sectors as this new economic cycle gains momentum. It's sectors like aviation, it's renewable energy, e-commerce. These are the kinds of sectors that are really leading the growth, and the underlying dynamics of these sectors, the way in which they use capital, all of this is very different from the past. And so again, the comparison with the past, trying to understand it on the basis of very rough approximate macro numbers, I don't think provides a true picture of the vitality of the economy as it exists right now.
That's true. Vitality of the economy perhaps not being captured by some of the old methodology. But Mr. Sinha, what about exports? That continues to be the elephant in the room, doesn't it? We've grown by just 1.2%. When we've grown at 8 to 9% growth, we've seen exports grow by 10 to 15%. And for any economy to have a significant sustained rate of growth, it's important that exports do well, that engine of growth does well. On that account, how big a concern is it that when the global economy is rebounding, our exports are really not picking up pace?
The good news as far as exports are concerned, Supriya, is that our industries and our companies continue to be very competitive globally. Again, when you look at it in terms of gains in market share, if you look at it in terms of contract wins, they're continuing to do quite well. What we need to be able to do, of course, is that we need to get this GST adjustment behind us. There have been a number of issues that we've been dealing with our exporters so that they can take full advantage of GST. So we've got to get the GST process behind us to really power exports forward. And the other thing that we have to work on is the currency. I am of the belief that our currency needs to be made more competitive so that we can better compete globally as well. So there are some underlying factors that we have to address, but once we address that, because our inherent competitiveness is there, Supriya, I believe that our exports will pick up momentum as well. Of course, global growth has just restarted. So as global growth also gains more and more momentum, I think you'll find our exports doing very well also.
And I'm sure, Mr. Sinha, is the trend in agriculture. 4.1 dropped to 2.3, and now the agriculture sector grew at 1.7%. Given the extent of the economy that's dependent on the extent of the population dependent on the agriculture, surely that's a number that you're not going to be, that the government is not going to be comfortable with. And when you see it in the context of the fact that the Rabi sowing has also not been has been lower this year, then that presents a slightly worrying picture on the farm side of the economy.
No, there are a lot of efforts underway. The Honorable Finance Minister said today that if you think about the next budget, the priorities are going to be infrastructure and the rural sector. So as far as the government is concerned, we are directing our efforts tirelessly towards strengthening agriculture, strengthening rural areas. And we are doing that through a variety of mechanisms. Obviously, it is through better MSPs, it is to be able to make sure our agricultural markets work well. Obviously, it is to be able to provide the necessary infrastructure in rural areas so that people can bring their produce to market and get good prices for that. So all those efforts are underway. Of course, we've been lucky that we've had a good monsoon. And so I think once this harvest is brought to the mandis, we will see a pickup in growth there as well. I can tell you in my own home state of Jharkhand, virtually every place that could have seen a crop to be planted and a crop to be available for planting, that has happened, and we are all expecting a bumper harvest at least this growing season.
All right, before we wrap this, two quick last questions, and one of them, of course, has to do with the headwinds, and one such headwind is crude oil. It's gone up by about 23-24% in the last 3-4 months. We've been very lucky with crude. It's been a very benign regime. We've been able to leverage that to our advantage. How much of a headwind do you see crude becoming? I'm presuming it will not derail the economy, but is it not going to significantly reduce the freedom that we've had on account of a benign crude oil regime?
No, that of course is very important for our economy, Supriya, to ensure that crude stays within a certain price range. Everything that we've seen and everything that the experts tell us suggest that crude is kind of capped at 65-70. So we are very much hoping that the shale oil cap that everybody talks about is going to come into play, and crude oil prices are going to be in that $60 to $70 range, which is absolutely fine as far as the economy is concerned, and is fine as far as our current account deficit is concerned, because we can certainly manage crude at those levels, and that's a fine equilibrium to be had between the consumers and the producers of oil if we stay at that range. Of course, when it gets beyond 70, that's where you'll start to see more stresses as far as our economy is concerned. But everything that we are seeing just now suggests that crude prices are going to remain in that range and not go much beyond that. At the same time, you also have to recognize that even as far as energy is concerned, Supriya, that we are going through a major structural shift as well, with renewable energy picking up as a major source, with electric vehicles picking up as a major means of transportation, with the railway minister announcing that we are going to move towards 100% electrification. All of these would indicate that our dependence on crude in the long term is going to come down, and the sensitivity that our economy has to crude prices also over time is going to diminish.
Mm-hmm. Quick last word, Mr. Sinha, and that is to do with counter-cyclical stimulus. And I must point out that there was this clamor for fiscal stimulus from various quarters within the government and outside, and you were one of the few who didn't join that chorus, and you sort of held your view that there should not be a fiscal stimulus. And I'm sure now with the Moody's upgrade, there's going to be more pressure on the government on that front. But do you still believe there's scope for counter-cyclical stimulus on the monetary side, or do you believe, given the way the inflation is picking up, especially food inflation, that window on the monetary side is gone?
Yes, now that I'm not in the finance ministry, I can be a little bit more forthright in terms of my own views as far as monetary policy is concerned, which is that I think we can definitely benefit from lower real interest rates, and we are hopeful, as far as aviation is concerned, as far as other capital consuming sectors of the economy are concerned, that real interest rates come down for us. and that we are able to use that as a way to propel the economy forward even faster. Clearly, around the world, most economies are actually following a policy of very low, if not negative, real interest rates. So that's the world around us. While at the same time in India, we have been pursuing a different kind of monetary regime, and I think that creates a somewhat of a disadvantage for us, both as far as currency is concerned as well as the cost of capital is concerned, which I alluded to earlier when I spoke about exports as well.
Mr. Sinha, always a pleasure chatting with you and getting your perspective on the Indian economy. Appreciate you taking the time and joining us live at ET Now on the India Development Debate this evening. Thanks for joining us.